Well, the dollar had a good week, didn't it? We can see it came down into this demand area here, and then had a nice week up. Came down, retested, found, you can see from the wicks it found buyers, and to be honest, as long as it holds above 92.44, 92.45 kind of area, it looks pretty hunky-dory for the dollar on the daily, which is bad for most other things in the world, you know. Every currency that is a dollar pair, where the dollar is the second part of the pair, the first currency is going to be losing out. On the weekly, again, if we formed lows here, we just, it was not, you know, the body is inside this previous week, the body of the week, but we just, look at this, just took out this wick here. Just push that a little bit higher. And again, it's all about, we can get rid of that now, this level here, 92.45, 92.46, something like that. Because they made the save quite dramatically. And you know, on daily close, from this close to this close, but we've got positive reversal on RSI. So this is bad for precious metals, it's bad for commodities. That's an awful lot of markets right there, that's an awful lot of instruments. It's bad for most currency pairs, again, that are anti-dollar. So let's look, as we are wont at silver. This update here was very exciting. I made good money because if you remember, I was long from down here. We came back into this demand zone and I was trying to buy. It didn't work out. As you can see, we got the wick up, second wick up, and now a very strong rejection. We sort of back tested this once, twice, big time rejection. It looks abysmal. This is not looking healthy or good at all. What I'm long from right under this wick here now, because I thought, well, if you can't buy when, you know, you're taking a wick like this, when can you buy really? So yeah, I'm down. So far so predictable. I'm down. I was up very nicely. I was at a break even, down. So yeah. So because we've taken this wick, more or less, and you know, we've got these little divergences coming in, but the daily looks so terrible. Unless we start seeing upside from here, I'm getting out, and that's me done in silver for the month. And I'm moving over to markets where, you know, at least on my broker, the minimum order size will be a lot smaller, and it's going to be back to slower, more painful but less painful, I guess, trading. You know, smaller risk, smaller reward, smaller loss. But yeah, we're not going to go to the bitter end in silver this time. And if I miss out, I miss out. Too bad for me. So we'll see what happens on Sunday evening, now we've taken this wick here. But silver is just the most fucked up market imaginable. It really is. I mean, look at this. Like, from where did this, you know, look at this move up. Whoosh! And then look, it's too much weight for this stalk. You know, the head of this flower is too much for this stalk to bear, and it just deflates and craps out. But I mean, for goodness sake, like, where was the origin? Where did this move come from? Well, basically anywhere under here. You know, hey, this was the last down move before we went right up. And look, when we came back into that area, nothing happened. You go deeper. Nothing. You go deeper, well, you get this here. But look how deep you had to go to get this, and that was nice and all, but then look, it's the double rejection and it craps out more. So, and they could fill this all the way down. This would be the next wick take area. This would be the next demand zone. If we go back to the daily, you can't see it marked on there. What have I marked it on? It's on the hourly. Yeah, so that's just from the hourly point of view. You know, this is the next wick take level. This is the next demand level. Demand zone. But in practice, like if we look at the 4 hour, this should be here, I suppose. And even on the 4 hour, look, you're getting divergence. We're not, you know, we're probing this bullish reversal area. We're not making these deep lows anymore. Although we could, you know. But if we fall from here, we're coming for this wick. We're going to come below this wick. Even with 1,000 units, we can't look far enough to the other side. And there it is. There's the ultimate low. Look at that. September of last year. If this is the range, this is like the ultimate range low. There it is. Maybe we're coming down here. Maybe we take it. Maybe we come to $20 even. It's just looking worse and worse. I mean, it shows how little anything has to do with anything when... I mean, when did the silver squeeze, quote unquote, start? Like here? Maybe March of this year? Something like that. You know, hundreds of thousands of people in the world taking, you know, hundreds of thousands of ounces of physical silver, like off the actual marketplace. And we're lower now than we were when it started. Price is lower than before millions of people bought millions of ounces of silver. What? Make sense of that. And people say, you know, and I was on Wall Street Silver and they're saying, oh, you know, it's so predictable, it's so manipulated. But it's like, why manipulate it from here to here? Why manipulate from like $11 to $29? Why do that if you don't want the price of silver to go up? Maybe this is all just a monstrous distribution. Maybe we're really going to pound down. This is what I've been worried about. We're just going to pound down. And by spring of next year, we could be back at like $14, $15. It's ugly. It's absolutely but ugly. Again, anything... So yeah, this doesn't work out. This wick take trade doesn't work out. I'm out. I'm running for the hills. I don't know. Again, if the dollar is looking good, what's looking bad? The euro. Again, you've got all your divergences coming in. You know, we took this low. Got a decent move up. You could have got some of this. And we pulled back into horizontal support. Again, it needs to find support here. Or else we're looking at, you know, drift down. Lower. Coming under these wicks here. Coming under $1.15.9. I think. So basically what we're hoping for is head, left shoulder, right shoulder in this area here ideally. Ideally not down here. Ideally at this horizontal support. Giving support to other anti-dollar assets like silver. And then renewed upside would be the thing. S&P 500. Again, prime buying area right now. We've just taken out this level here. This was an important pivot line here. So this is still prime buying. You know, we've reset our indicators back to areas sort of the previous prime buying areas on previous pullbacks. And on the shorter period RSI, we're below where we were here for the August pullback. So lower time frame. Again, there's the taking lows 1, there's taking lows 2, and again some kind of divergence coming in. So, well, this means something on a daily time frame. Maybe that was my pivot. So it's not a low take. It's something else of importance. Yeah, it'd be worth a shot. Stocks go up after all. Pull out, pull back, pull out. Look at the longer term view. Yeah, I mean this is all within Move down to 44. Teens and 20s, would test this channel. A more pronounced pullback would go under this wick, maybe down to 42.50s. If they want a real big pullback, they'll come under this low here. But it's incredible to think that, where were we at the start of the year? 3,700. So we're almost 1,000 points higher. We're 800 points higher. Yeah. But we are in buy pullbacks mode. And this is a pullback. I've not looked at market breadth and internals and whatnot yet. Ratio to TLT, whatever takes your fancy. So maybe this is a bit premature judgment. Maybe this all turned horribly negative. I'll just have to have a look and see when I've done this. So if I get pushed out of silver, I'd be looking to buy. Establish a buy. Let's look at the weekly on the Nasdaq. Yeah, look at that. Right up into this fib channel line. And we're just rolling over a little bit. Need some movement, and this is such a precipitous move. I mean, that looks so unstable. There's the COVID crash. We found value, global bailouts around the sort of 6-7k level, and it's more than double that now. It's more than double that. It's total craziness. It's scary. It's scary, but I mean the system says buy pullbacks, and I said I would abide now from a more simple and more logical approach that leaves less room for flip-flopping and indecision. So I guess I would have to say that just like the S&P, if you could go down onto a satisfactory enough lower time frame and find a reason to buy, that's what you might do. Maybe not yet on Nasdaq. Maybe we've got to come lower. Oof, maybe a fair bit lower. Maybe we're going to come back down and revisit this previous fib channel line. It's 14.9, 15,000. We've done this one. Maybe we'll come back and revisit this one. Halfway would be 15,250 between the two. So maybe. GBP USD doing better than the euro against the dollar, at least in the short term. I mean, dollar's been going up, but the pound has also been moving up. Where's our dollar index gone? There we go. See, last few days, up move, pull back, up close. But look at the pound, down move, kind of up close. Still looking pretty good for the pound. There's your back test. Selling came in here, but we just went into this pivot. You can see it cutting through the candle bodies, and it goes through all this chopping price action here. It's sort of the mid-range for it. Excuse me. And just like we've run some wicks on silver, on the much shorter time frame, we've run some lows under here, these overnight lows here, Scott took, and we're seeing a triangle form in RSI. But the disconcerting thing is this may be rolling over here. Maybe it needs more downside. Who knows? That's the thing with trading. Who knows? Buy new lows, as a rule of thumb. That's what Simpleton says. Who's disappeared off the face of the earth. Miss his videos. FTSE, yeah, I mean, God, I mean, the laggiest of all the lagging indexes in the world, and even it's pulled back. But look at this, it's found resistance so many times. This is a weekly chart on this fib channel line here, and it just keeps getting rejected. And the ease of movements turn negative. The moving averages on ease of movements have turned negative. RSI has gone negative. It's not good. And we've got our first red weekly close on the moving average here, the simple 18-period moving average. That is supposed to be determining my trending bias. He's trading a vape. I'm going to have some vape. CBD fights COVID. Preliminary study. CBD prevents the replication of the COVID virus. So if I huff a load of this into my... And it's cherry flavour too. And cherry's a fruit, and fruit is good for you. So if I huff a load of this into my chest periodically, I should be COVID-proof, assuming I've not had it already. I just said the forbidden word, so there you go. Again, looks terrible. I mean, the S&P, you thought, looking at it, clearly this is a pullback, buy it. On the daily, the FTSE looks terrible. Whew. On the hourly, it looks like you're buying the pullback. That looks a lot clearer. It's a lot happier. You know. You could put a trend line on here, I suppose. You know, buying under here. You're buying this down candle, this demand zone that generated this. Did we take that? Ooh, no. Oof, that's like a double. Look at that, like a double bottom. That would be tempting for someone to take. But the daily looks so bad. It's just always my issue with the FTSE. The daily looks so bad. You know, is this price chopping, consolidating to go down here, or you know, there's that double low on the higher time frame, on the lower time frame, or is it renewing its strength for move a bit? My view is it doesn't look good. We've looked at the dollar basket on the daily. Let's have a look at it on the weekly. And holding this black line is key. 92.30. But we've put in a little bounce right on the 50 here on RSI. Maybe we'll just have chop fill. Maybe it'll just be chop. But with an upward trending bias. We've come down, sort of got near this fib channel line here. Maybe we're going to go up to here, so we could hit the next fib channel line, clear out these wicks here. So $94.30, $94.30, $94.30, or whatever, something like that. Gold, look at it. Looks terrible. Looks terrible. Much more dramatic move out of silver, but also a lot more sort of like this was just a grab for these lows, so people bought it and now people are like, I'm out, let it drop. You know, it doesn't look like a convincing constructive upward structure. It just looks reactionary, like you got the reaction from these lows and now it's ready to sink again, is the kind of look it has to it. Again, unless we immediately start consolidating to break up and out of this channel, unless this, you know, this isn't rejection by the channel, it's consolidation under and testing and retesting until it can break. But it doesn't look good. Let's look at the weekly actually, shall we? Is gold done? You know, does this count as a 20-year bull market? I think I've asked that question before. You know, imagine getting an ounce of gold for $250. And the weekly doesn't look good either, does it, to be honest? I mean, sure, it barely took this. Doesn't look good. It just doesn't, in my opinion. Unless this is still the bull flag. And again, we more or less immediately resume to the upside, which is what we'd want to see. GBP JPY, well, according to IG's client sentiment data, a fairly large majority is bearish on this pair now. So maybe this would be a good alternative to buy, to get into. So last week was all consolidation with rejection here, but a close right in the middle of this sort of area, this range here that had been generated over the last week or two. So people were selling above here, but if we revisit, then presumably everyone's sold out and we've got to go higher. We've got to go 15.36, or whatever you want to call it, £1 and 53.66 against the yen. So it doesn't actually look that bad, in my opinion. And this area here, this top could be becoming a bottom here. We've put in a positive reversal on RSI. This could be a good buying opportunity, even if it comes a little bit lower. Just anywhere in this sort of pocket, or if it takes this wick low. Maybe the fact that sentiment is negative is a bonus. Dollar yen. Daily. In the grand scheme of things. What's funny about this is the dollar yen has followed the same path sort of as silver, and we've had this move up and then we've been in a range for approximately a year. Fair enough, that's from March to September rather than like September to September, but that's remarkable, isn't it? So we were testing this trend line here, went under it, went back in it, sort of, just slightly. Don't know what to make of it. Don't really pay a lot of attention to USD JPY. Probably shrink this down a bit. Get a bit more view of price. A bit less view of indicators. I feel like I've readjusted most of my other charts. Because this is one I don't look at so much. There we go, that's better. Yeah, look, that was almost like the move in precious metals. That's amazing, really. The big up candle and the drift back down with a stronger close. Interesting. Bitcoin on the weekly. Well, these are candles shrinking. Still going up technically. Ooh, just barely. Then a sort of a move down that made lots of people shit their pants. Looks like a small candle on the chart, but that was a what's that, from 53 to 43? Yikes, that's like a 15% move. Well, is this the retest here of the underside of this area here? Like the underside, this low. Is this low becoming a high? Is this bottom becoming the top? Are we going to roll over? Or are we going to consolidate under this trend line? And then burst up and through and go to new highs? You could make the argument that this is the positive reversal. For some reason, if you have a 14 period RSI, like a longer term, and a shorter term, a slower and a faster, it still insists on drawing the lines on both. You draw a line on one, it draws a line on both. I'm sure there's a simple fix for that, but I can't work out what it is. But then we've had the upward channel, upward sloping channel, bearish, bear flag, and we've broken down. So prima facie, yeah, well, I don't know, maybe we can come up and take the wicks at 47,500 and then dump out. So that maybe that would suck people back in. These lows here at 48,400 could become a resistance. So we could get people sucked back in into this sort of void here, this sort of area here, and then roll over, or we might just dump out. You've got to bear in mind this though. But, you know, impulsive move, pennant, usually one would anticipate another impulsive move to the downside in the same direction as the first. Global uranium. Well, I'm extra fucked off. Now I called this, and we've gone from 1765 to 2626. That's almost 1,000 points. I called it. I literally called it, and I could have got in if I'd moved my money into my IG spreading betting account rather than the MC4 account that I've been using. I could actually have bought in long here because the margin requirements aren't even that bad. Well, we just found out that the European Union is banning new nuclear power plants. Will that have a negative effect? This is a fantastic move, but now that is, you know, that's a bit of a dampener on things, isn't it? Is there still going to be increased anticipated demand from other parts of the world that will mean that news barely registers and we continue up in a completely obscene and absurd way? I mean, look at that, that's beautiful. Could this be the top? In other words, or are we going to maybe have a bit of consolidation, hopefully not till Christmas, and then, you know, big move up to like 6,940. So almost another doubling, doubling, tripling, almost. Can't believe I called to get in there. Fuck. Well, that's life. That's what all the people say. That's what all the traders say. You're fucked. I know I'm fucked. Why? Because I can't stop trading silver. The issue is as well being back at work. Like, being at work is very draining. It makes you all tired and emotional, and it makes you just want to get the fuck out of there. And then I get my phone out and I'm placing trades, and like they're over leveraged and they're not great, and it's just like it's desperation really. I'm just sick. I'm just sick of it. I want out so bad. And because I want out so bad, it's sabotaging me. Like, I'm actually going to be trapped longer because I want to get out that badly. I just want it to, I want my freedom. I don't need fucking private jets and Lambos and stuff. I literally just want my freedom. And obviously that requires some money. And ideally more than I'm earning now from my job. But no, I don't need bags. And bags and bags and bags. But it pisses me off. Because it's so predictable. It's so predictable. And it's so bad. Let's do on OBV. Yeah, very slight positive divergence on OBV. If that counts for anything in the world. Sort of the same again here. But OBV's pretty shit. Alright, let's stop there.